Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Laney and Bert, the Dividend Diplomats. Guys, this stock we are talking to you about right now popped this week. After earnings, they were up 4% the day they released earnings. Year to date, they're up 18%. They are up over 37% over the last 52 weeks. We now own 6K in this Dividend Aristocrat. The question is it time to sell and lock in our nearly 50% gains on this stock?
Smash that subscribe button. Give us a nice thumbs up, guys. Support your boys here at the Dividend Diplomats, guys. Always talking about dividend stocks. Here comes a nice dividend aristocrat stock here on today's video. It's a name that doesn't get mentioned much, but they have a market cap over 175 billion. This is one of probably the longest running companies that there is in the technology space. They've kind of been able to differentiate themselves throughout the decades. And it's very interesting seeing that this stock that I also own, obviously Bert and his wife own quite a bit of, is up 37% since last year. AI
Yes.
boom or an AI soon to be bust?
Yeah, and this is the one I would never have guessed was riding the AI boom to prosperity. Like when you started this out, this was not the one I was going to pick and say, buy this one, you're going to have some nice gains here. You'd think it'd be Nvidia, right? We're not talking about Nvidia. We are talking International Business Machines, ticker symbol IBM. So before this gain, IBM, Lanny, has been nothing but a laggard. That stock has stunk over the last 5 years. In fact, 5 years, they're up 32%, which is less than that 37% they're up over the last 52 weeks. IBM has been stuck in mud. They had that massive Red Hat acquisition. What was it, 4 or 5 years ago, Lanny? You thought they were going to pop? Not so much.
Yeah, about almost 5 years to the day, I think they bought
Yep.
them. Really trying to add another service revenue model in the semi-tech space there. At first I think it was doing very well. And now it seems like, it's like a seesaw. Something else is doing well for IBM, but Red Hat showing a little bit weaker results, weaker forecast as well, right?
That's absolutely right. And you'll see that when we talk here about the earnings in a bit. What you've seen with the IBM story is just that. They have had declining revenues, sales have slumped, earnings have slumped, free cash flow has been fine. But after that Red Hat acquisition, they are stuck with a lot of debt on the balance sheet. So that's why we're coming here today, Landy. We're going to look at that earnings. We're going to run them through our screener. We're going to look at my position and say, you know what? Is it time to take the gains and just be happy with what's happened here with IBM? Time to set the limit or the limit order for when we should sell it, or are we going to ride the AI boom with IBM?
Where it's like it's time to sell the gains. But yeah, you're right. They did take on a lot of debt. I do want to touch on that, but luckily it's gone down almost 7 to 10% since they added that debt. They were at about 36 billion before the acquisition. It blew up to about 54 billion, I believe, in 2019, and then now it's trailing below 50 billion in debt. So they're chipping away, Bert. They're chipping
Yeah,
away at that debt here.
that's the good sign. At least the debt's coming down. The debt is coming down. So what happened to the earnings? What caused this stock to pop? And it really kind of confused me, Lanny. I saw it was up so much, and I'm like, they must have crushed earnings out of the park. That wasn't what
Crushed it. They
happened.
must have crushed it.
The headline just said IBM has mixed signals. And I was very confused at what happened here. So let's just start reading off some of the things that happened. Quarterly
Read it off
revenue
to us.
was 15.77 billion. Earnings per share were 1.99 billion. So revenue and earnings both beat expectations. Earnings per share outperformed expectations by a lot. It was up 7% because they were crushing it from an operational standpoint. Not only that, but I think really pumped this thing up, Lanny, was the free cash flow. Their free cash flow was 2.61 billion. It was up 24% year over year. So IBM is bringing in some serious dinero.
Yeah. Yeah. I mean, free cash flow, obviously a lot of, you know, every business needs to manage the cash flow well. And anytime you can add additional free cash flow to use for additional capital expenditures, share buybacks, paying out dividends, investors love it. And that's what the investors really, really reacted to, as Bert said, up 4%, after the earnings release, which is pretty large for IBM
Yeah.
considering, just about a month ago, they were trading at about 170 a share. Fast forward now, about $192 per share. Earlier this year, though, they were getting closer to 200, and I feel like they're about to get back to that 200 mark.
Yeah, they pulled down. That was something we threw up there on X was I was joking and saying I didn't expect IBM hitting 200 on my 2024 bingo card. But here we are, Lanny. I didn't think it, and it's real. The possibility is real because they are in this AI hype, and that's what you saw everywhere. They hyped up that AI book of business. They said their AI is at $2 billion. So they're getting a lot of consulting, a lot of transaction fees, putting a lot on the cloud. You're sorry. We said this in an earlier video. Lanny, about how the implications of AI are going to trickle through somewhere, right? It's going to cost people money. It's going to cost businesses money to implement AI, whether it hits the consumer up front or not. IBM's on the other side of that. They're getting a lot of revenue from a lot of the transactions with AI. So they're picking up the benefit here. The question is, how long is that going to last?
Yeah, I mean, they have to do a lot of consulting with businesses on how they can incorporate AI appropriately within, I don't know if you guys have looked at your policies, but within company and corporate
Hmm.
policies, within confidentiality of data, within reliance upon AI, there's a lot that goes in on the security side of things.
Hmm.
And then how do you incorporate it into your ERM, ERP type system? So IBM Consulting, yeah, we'll offer our hours, our time, and services to create a plan for you to deploy AI. And I'm assuming they also offer some sort of AI,
Yeah,
you know,
yeah, they have Watson. They
software.
have, yeah, Watson AI. They have all their cloud business. So they're picking up a lot from it. And that's also what's driving the hype. They've crossed that 2 billion book. Their consulting is on fire right now. IBM is great, or not so much, because what is lagging here? And this is what I thought was actually kind of interesting. You were talking about that seesaw earlier with Red Hat, where it popped and then it came down. Red Hat infrastructure. So the core IBM business is still kind of sucking. And I think that's the funniest thing. It's not doing well. Sales are down in the two main sectors that have always been letting them down. But right now, IBM's just getting pushed up by that AI business.
They're getting pushed up. They either get pushed up or they can get pushed out, guys. Yeah, so obviously a little mixed quarter there. Expectations for going forward, on some areas don't look as strong. Hmm. I know it's hard to predict what's going to happen with IBM stock. Again, it's very fun that we're doing such a deep dive here on IBM stock. By the way, you viewers out there, if you guys own or have owned or currently, obviously are buying IBM stock, let us know what you guys think of this stock right now of IBM. Now, Bert, you and your wife have about 31, 32 shares, total market value, give or take about 6,000 on a cost basis of 35, 3,600. So almost 2xing your position
Yeah.
here. But let's go through the metrics and then maybe we'll see what you guys are thinking about doing
Yeah.
with your position.
Yeah. So we're going to put the screener. We'll run through the PE ratio, payout ratio, history of increasing dividends, and that dividend yield. After the pop, we're recording this on July 25th. IBM's closing price was 191.98. Forward earnings for Seeking Alpha were $10.10. That's a PE ratio of 19.01x. That is well above their 5-year average PE ratio of 13.
19, still undervalued to the market, but yeah,
Hmm.
higher than where they usually have been for good old international business machines here, guys. Their dividend, it's pretty hefty, $6.68 per share per year, obviously broken out over 4 quarters. You know, a 66 payout ratio, 66%, a little bit above where we like to see at our 60% threshold, but they've been out here for so long, probably 5 to 7, 7 to 10 years almost in that same range.
Hmm.
Not afraid by the payout ratio. I think they manage their capital and earnings very well.
You feel better about it with how strong the free cash flow is coming in. So if you're going to have a high payout ratio, at least you're seeing the free cash flow trending in the right direction. Dividend
Exactly.
growth has famously been awful of late for IBM. Yes, they are an aristocrat, and they are an aristocrat not by sprinting across the line landing. They are an aristocrat by tripping, stumbling, crawling, and then just somehow rolling over the finish line because that 5-year dividend growth rate is only 1.92%.
Whatever it takes, as they probably are thinking,
Oh,
just to keep it going.
yeah. And
Yeah,
their
very low. Yeah, go ahead. Go
I was
ahead.
gonna say their yield has come down a lot. Remember when IBM was yielding 6%, Lanny? Do you remember those days? IBM was the six
Look,
percenter that
I mean, those
dog.
days weren't too far along.
No,
A
they're
moment
not.
ago.
They're yielding 3.48%, well below that 5-year average yield of 4.91%. So
Wow. I mean, that's what happens when your stock is up 18, 19% this year, up 37% since last year. I mean, just do the math where they were last year, and you'll know that that yield was a much closer to that 5-year yield average. Again, beast of a company, almost at $200 a share, currently at $192, Bert, sitting at a huge unrealized gain. Are you thinking of taking some cream off the top, or are you going to ride the wave?
that's the question. That is the hardest part. I think this is honestly the hardest investing decision. When do you know when to take your gains and walk away?
Do
I
you
still
believe
don't
in
know.
IBM?
I still don't know. It's a tough one because where are they positioned? This is where I would love feedback from the viewers that might know more about IBM, have experience working with them in this AI boom. I'd be curious how much people are using IBM for AI just to understand, is this a real AI boom or is it just part of the bubble and they're riding the wave? We know the core business is struggling, but are they building out this huge new AI machine that can generate the cash flows? And for now, I don't think I'm going to sell it at 190, 198. Maybe I'll let it ride a little bit more. I'll set the limit order in. Our lowest cost basis, I think, was 112 in one of our portfolios. Maybe I set it to double my money on that for one of them. So where that would make it what, 224 a share? And if IBM jumps up another $30 per share, I'd be happy to take the money off the table then. So I think I'm going to set the limit order in the 220s, reevaluate, but I'd also love everybody's feedback here on their experiences with IBM in this AI bubble.
Yeah, on the positive signs, they've continued to grow that net income, after it heavily was reduced come 2020 at 5.6 billion, you know, earned 7.5 billion, last year in 23 and projected to earn somewhere in that, I don't know, 8.5 billion range this year. I mean, you might see a little bit more appreciation possibly on the IBM stock. I'm currently dripping. Not doing anything crazy here, but yeah, I'll keep my eye on that 224. Is that what you
Yeah.
said?
Yeah. Yeah. I'll make it 225 to make it round because no one wants to sell at 224. It'll sell at 225 will be the limit order I'll consider. Let me know, everybody, what would you do if you were me in this situation? Let us know. We've asked a few times. Let us know your thoughts on IBM right now and how you would handle a pop-up like this in a company that's historically been such a laggard.
Hey guys, remember, don't forget to like, subscribe the video. What other stocks have you been buying? Let us know in those comments below, guys. Thanks for rocking with us. Keep investing, and let's get to financial freedom, baby.
But remember, you're either with us or you're against us, Jack.
That was Bert and Lanny from the Dividend Diplomats. Over and out.